Welcome back, TTM Trades. Say, look, I haven't really recorded any videos because the market has been playing out. The exact. I mean, pretty much what we called in the last video. We pretty much said in that last video that um that 30-minute chart on the futures market was starting to uh trend downwards, as you can see here. And I stated with the 30-minute chart trending downwards like that, that you would see the price action consolidate between 467 and 469. And I mean, that's exactly what we've been doing. You can see here we got 467 here, and then the top sitting at right at 469. So we just been back and forth between 467 to 469, give or take, for the past, what's today? Past 2, 3 days. And then we finally broke out to the downside. All right, so we already know what the entire market's waiting on. The market is pretty much trending sideways and just trading cautiously because everybody's waiting on the consumer price index numbers tomorrow, um, which will definitely give you an idea how the market is gonna uh, play out. Now we are forming a M top pattern. Those are two very specific patterns I do trade. Just using a double Bollinger Band trading. Is M top patterns and W patterns. And what I mean by M top is a stock is in a strong uptrend, boom, 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 boom. Let's change the color of this so it's a different color. Let's go yellow. Strong uptrend, boom, first leg on that strong uptrend is holding that top one standard deviation. Forms the second leg down, as you can see here. Then you get that next leg up. On that third leg up, it struggles to get back above that top one standard deviation Bollinger Band, as you can see here on the daily. All right. And we know a stock that's in a strong uptrend will hold that top one standard deviation. And a stock that's in a strong downtrend will hold this bottom one standard deviation. All right. As you can see here on the return to get back above that top one standard deviation Bollinger Band on that third leg up, you can see it struggled to get back above that top one standard. And now we're possibly looking at the completion of the M pattern to come back down. All right. Now, again, the bulls have a series of supports that they're working with. It could be a shallow drop down to this 464 level where you see that middle BB is at. So you got 464, then you come down, you got 458, and then you got 453. All right. Either way, one of these three support levels hold on the pull down going into tomorrow, depending on the news. Then that gives the bulls the opportunity to break out of this M top pattern and create a W pattern at the top of the head upwards, where it's 1, 2, 3, hit that support leg, and then W top completion where they continue to head back higher, where they break the previous highs. Boom, 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 boom. All right. Now, if those support levels do not hold, then again, you have the opportunity to come back down here to the 150 SMA, which is again sitting at 440, which I've been waiting on this market to hit 440 probably for the past 3 days. All right. What I did do, again, we talked about it last time, looking at this 30-minute chart over here to the far left, on that 5-minute chart. Remember, I told you when we first pushed up into that 468 level of resistance. I did take those 440 puts here, and when we got that dip, remember I said I was up 7,000, but the market immediately rallied, closed out the position, only closed out with 2 grand, and then the following day the market began to pull back again here, um, and then as it began to rally, as it pushed back into that 468 level, I bought some more puts. The market did rally a little more, which brought me down on my position, roughly I think 1,500 to 2 grand. Um, but with this consolidating move sideways like that, and then it moving sideways and consolidating with days passing by, uh, both the Vega, which is volatility, and the theta was just killing me. Each day I was losing money just based on that. But again, I want to continue to follow the setup, as you can see with the 30-minute chart starting to the price action consolidating in between the bands. That 30-minute chart PMO starting to fold over. And then again, us being in a consolidation cycle here down here with the Bollinger Bands with at the bottom. So again, consolidation cycle. Remember, I always told you volatility moves in cycles. There's a volatile period, consolidation, volatile period. So we already had the volatile period here. We're going back in the consolidation cycle. And in that consolidation cycle, we either going to have a breakout or a breakdown. Um, I've been waiting to pull back for the longest. 462 is on the table on an intraday basis. If we pull back to this 462 on the 30-minute chart, that'll correlate with the 2-hour chart. 150 SMA also sitting at 462. Hopefully the bulls get a bounce in that 462, the 464 area and can continue upwards. If not, then again, we're looking at that 454 to 458 level. And then from there, they lose that. Of course, we continue that downward trend to that 440 level we was talking about. So not much has really changed. Now do keep in mind on the 2-hour chart, the PMO was still trending downwards. Yes, it did begin to recover and it got back above its short-term average, but it has not yet got back above its long-term average. Which if the momentum begins to wane, then this will get rejected by that long-term average and then start to come back downwards, which will correlate with this downward drop going into tomorrow. Now, real quick, just on what could make things go from bad to worse. Okay. And this is something I want the Bulls to really pay particular attention to. Is Thursday the unemployment numbers came out. And I thought that would have made the market fluctuate a little bit, but it really didn't make the market move too much, right? We still stayed in this tight holding pattern between 467, 469. But the unemployment numbers came out. Matter of fact, I got it up right here. I was just looking at that. Slide this over here. The unemployment numbers, I mean, previously initial jobless claims was 227,000. They was forecasting for 215. It came in at 184,000, which is way better than expected. So what does that mean? That means there's not that many people filing jobless claims, right, for benefits and things of that nature. So again, this portrays to the Fed that we're in a healthy labor market, um, so where everyone's working for the most part, um, and it just makes the labor market look more healthy. The stronger the labor market looks, the quicker the Feds will be sure to tape, or not quicker, but at a higher rate, they will begin to taper their bond purchases. Now, the market in general is already expecting that, right? They're already, Powell has already mentioned um, that he intends on, you know, tapering his bond purchases probably at twice the rate of speed, right? Um, so the market may have already priced that in and is already expecting that. Now, what really can make the market volatile tomorrow is this consumer price index, okay? Because one, the market's already expecting him to taper, but if the CPI comes in tomorrow very high and it shows that inflation is much higher than what they're predicting, not only will this, like I've said before, push Powell to cut back on his taper, taper his bond purchase a lot quicker, but it will also push him to raise interest rates a lot faster. And one, you already got the looks of a healthy labor market. And then two, inflation is high to the point where he has to raise interest rates. There's no him getting around that. It's going to make the market very volatile tomorrow, and it's going to make the price action dump very hard. All right. Now, Jerome Powell won't actually make that announcement to the 15th. It won't be officially said by him to the 15th. But just based on these two reports, Thursday, healthy labor market based on the initial jobless claims, and then Friday, high inflation, that already gives Powell the ammo to come out on the 15th and make those announcements. So, what you could see happen between tomorrow, which is the 10th, and then the 15th, is you can see the market be very volatile and sell off violently down. Hopefully, uh, right now I'm bearish, but for the bull's sake, uh, it could sell through these support levels of 464, 459, 453, and come straight down to the 150 SMA at 440. And it could sell off very violently and very fast. And it looks like that's how the market is setting up with this M top pattern right here. Um, and the thing about that is the market will be very volatile all the way up until the 15th. And I don't think the 15th is until Thursday. 15th is on a Wednesday. So between Friday up to Wednesday, the market will sell off hard. And then on the 15th, by the time Jerome Powell makes the announcement, the market should already have that announcement priced into it. And then from there, him making that announcement, which should already be expected and priced into the market should rally. All right. But if you are bullish and those CPI numbers come out tomorrow, this could sell off very fast and the market can get very volatile fast. Now, one thing to pay attention to, it already looks like just based on the option market, this volatility is already getting priced in for tomorrow. Because as you can see here on the daily, with that strong rally and the SPY, the VIX dropped very fast, but soon it hit his middle Bollinger Band and the market started consolidating. You can immediately see on an intraday basis this 30-minute chart start to recover and it broke out to the upside. The PMO, which has been trending downward, start to break back above its moving averages and heading back into bull territory. And you can see even here on the 2-hour chart, it came down to its 150 SMA and then immediately broke above it. And then as it consolidated right here on top of it, set on 150 SMA. Even the VIX is looking like it looks like the option market as a whole is already pricing its volatility in, based on the call put options that are being purchased on the market right now, because you can see the VIX is starting to consolidate right here at its 150 SMA average, and it's sitting here like it's waiting on tomorrow's announcement. And the option market is already pricing that in, whether they're hedging or whatever the case may be. You can see that the option market is pricing in its volatility and they're preparing for it. So you can already foresee that on the VIX and what this could possibly become. Now, one stock that I am looking at that is positioned very nicely. There are a lot of stocks that are positioned very nicely, but there's one in particular that I am watching, and that is PayPal. Weekly to the right, daily in the middle, 2-hour to the left. As you can see here, there's still a lot of work that needs to happen intraday. All right, you can see the 2-hour chart. PMO is still trending downwards, and it's trying to have a slight breakout here, but it's still in bull territory. Um, and the 2-hour chart is below its 150 SMA. All right. So, one, a bottom needs to consolidate in the 2-hour chart and it needs to get above its 150 SMA. And then two, once it gets above 150 SMA, uh, which should correlate with the daily's middle BB. Once we get above the daily's middle BB and we kind of hold the middle BB along with the bottom one standard, and consolidate above those levels with the PMO crossing over, then we can start looking at possibly making entries. But PayPal is, I mean, positioned perfectly to make an entry. I think this is about a 40% drop right here, um, which is a great buying opportunity. Let me see how much this drop is from top down. Yeah, about a 42% drop from the highs. So as you can see here, the 150 SMA is a very important moving average for intraday traders and retail traders who trade on smaller time frames, right? We may look for like the 20 SMA, 30 SMA, 50 SMA, 5 SMA, 10 SMA. Every trader has their moving average they look for. Big time investors look for the 200 SMA and 150 SMA. So as you can see here, each time PayPal pulled back, I'm pretty sure this ran down here. Right around 150 SMA, you got a strong bounce. And then again, when it pulled back here in February 20, a lot of buying from big time investors, another strong bounce. So now again, we're sitting here on this 150 SMA and we hit it. You can see these weekly candlesticks is very long, long, long. This one wasn't that long, but it closed at the bottom. Very long, long, and then it starts getting smaller, smaller, showing you that that window of selling is getting smaller, and then boom, you get some buying coming into play. So I do think we consolidate right in this area. I do think 175 to right around 189 is a good risk to reward buying area because there's a 40%, 42% ride back up to the top. All right. And then the risk to reward is, if you break this 175 SMA and you get back below, what was the low of this consolidation? You get back below the low of 172, maybe even 170. You put your stop limit in, cut your losses, and then wait for it to continue to drop down. But again, you get in at the low of 175, you got a 3-point loss to the downside with a huge spread to the upside. So the risk to reward is very nice on PayPal, and I really love right where it's sitting at. So just depending on how this dip play out tomorrow and how volatile the markets get, I'm gonna pay attention to PayPal and see how well it holds its 150 SMA. But my intentions is to lock in about another 100 shares of PayPal, sitting right here at 175, right on top of his weekly 150 SMA, as the risk to reward value in this play uh, looks very good. But that's all I have for tonight. Just want to touch bases with you all. We'll look at the futures market real quick. We can see the future markets is kind of sitting here and it's probably going to stall out in this area. I wouldn't be surprised if it dips down to 463 before market open. Um, well, dips down to 463 before the CPI data comes out. But TTM trades till next time. Make sure you are up and paying attention at 8:30, whether you're watching Bloomberg or not. Previously, it was 0.6%. They're forecasting 0.5%. But I can tell you right now, if this is 0.6% actual or higher, especially 0.7%, the market is going to get volatile very fast and violently. And if you are a bull, you may want to close out your position quick. But till next time, TTM trades. I'm out.